Have you ever wondered how money moves today when you pay with your phone, send cash on Venmo, or scan a QR code at a street stall? Over the last 2 decades, the way we move money has altered more dramatically than at any previous point in contemporary history. A generation ago, payment referred to cash, checks, or swiping a card at a retailer. Today, a simple tap on a phone may move money over the world in seconds. Digital payments are more than just a technology enhancement. They represent a social, economic, and behavioral revolution. Platforms such as PayPal, Venmo, and India's Unified Payments Interface, UPI, have become integral to how individuals, merchants, and even governments deal with money. Understanding their rise reveals a lot about innovation, inclusion, and the future of financial institutions. Digital payments are the electronic transmission of money through devices and platforms rather than actual cash. These include P2P payments, P2M purchases, and account-to-account transfers. Digital payments, whether conducted via mobile applications, websites, or QR codes, mark the transition from tangible to invisible money. This shift affects not only business, but also the mentality of spending your smartphone has practically replaced your wallet. PayPal, launched in 1998 as Confinity by Max Levchin, Peter Thiel, and Luke Nosek, was one of the first fintech companies to pioneer digital payments in the internet age. Confinity joined with Elon Musk's online banking business, X.com, in 2000 and rebranded as PayPal shortly thereafter. Its breakthrough idea was delightfully simple: allow customers to send money over email. That notion transformed online payments, allowing millions of eBay users to transact securely and easily. By 2001, PayPal had millions of accounts and a viral growth engine riding the early e-commerce wave. Venmo, which debuted in 2009, emerged during a different cultural moment, the smartphone era. It was designed as a mobile-first, peer-to-peer platform with a focus on younger users who wish to split bills, share rent, or pay modest sums quickly. When PayPal purchased Venmo in 2013, it inherited more than simply an app, but also a social network for money transfers. Venmo's social feed-style interface transformed payments into interactions money with a message and emoji added. India's Unified Payments Interface, UPI, unveiled in 2016 by the Countrywide Payments Corporation of India, NPCI, is a unique innovation. A countrywide, interoperable, real-time payment system. Unlike private networks which compete for consumers, UPI unites banks, apps, and merchants through a unified architecture. It allows customers to send money instantaneously via mobile numbers, virtual IDs, or QR codes at no cost. In doing so, UPI significantly lowered payment friction for consumers and small retailers, allowing millions to enter the formal digital economy. Digital payments such as PayPal, Venmo, and UPI are important because they change the way money flows. They eliminate the need for intermediaries, shorten settlement times, and introduce new ways to assess value, including transaction speed, network reach, and interoperability. PayPal's early success was powered by e-commerce. As online retail grew in the 2000s, PayPal became the preferred payment option for many eBay vendors and beyond. It capitalized on trust and ease at a time when people were apprehensive about submitting credit card information online. By the 2010s, PayPal had expanded globally, including merchant services, mobile wallets, cryptocurrencies, and cross-border transfers. Venmo's trajectory mirrored societal changes in the United States, particularly among younger users wanting frictionless P2P transfers. Its inviting UI and social feed gave payments a casual, conversational feel. Venmo eventually evolved to cover merchant payments, credit, and debit offerings, integrating itself into PayPal's larger ecosystem. UPI, on the other hand, is experiencing unprecedented growth. UPI transactions increased from 151 million in January 2018 to more than 9.3 billion per month by mid-2023. In terms of value, it now processes trillions of rupees per month, accounting for 80 to 85% of India's retail digital payment volumes. The leapfrog effect skipping cards and going straight to mobile shows how infrastructure and policy may hasten financial modernization. Globally, the transition from cash to digital is evident. According to Ernst & Young and other studies, e-commerce, smartphone penetration, and enhanced financial infrastructure have all contributed to the mainstreaming of digital wallets. Traditional banking access has lagged in Asia, Africa, and Latin America, yet these regions currently lead the globe in digital payment innovation. A variety of technological, behavioral, and institutional variables have fueled the digital payments revolution. The first feature is convenience. Digital payments minimize the friction associated with cash. No need for change, lineups, or paper receipts. Consumers have a seamless experience, while merchants get speedier settlement and easy reconciliation. According to a time analysis, the more seamless the payment, the more individuals spend because it feels effortless. The second category is network effects. The value of a payment platform increases with each new user. PayPal's early viral loops and UPI's universal compatibility both demonstrate this phenomenon. When a network hits a tipping point, its expansion is self-sustaining. Third, mobile technology has made a significant impact. Affordable cell phones and abundant mobile internet have enabled billions of people to conduct digital transactions. In India, the rise of low-cost Android devices and QR-based payment systems enabled even small sellers to accept digital payments. Fourth, policy and institutional innovation had critical roles. The open architecture of UPI, combined with bank integration and government backing, ensured confidence and accessibility. Similarly, regulatory adaptability enabled PayPal and other fintechs to expand across borders while remaining compliant. Finally, globalization and merchant innovation have expanded digital payment options beyond domestic use. PayPal's 2025 plan, PayPal World, aims to integrate major wallets such as Venmo, UPI, and TenPay, implying a future in which payments can move globally as readily as messages on the internet. Today, digital payments have numerous layers: peer-to-peer transfers, peer-to-merchant transactions, and cross-border commerce. Venmo popularized peer payments among friends. UPI expanded them to everyday merchant purchases, and PayPal connected them to international trade. In India, UPI's growing percentage of P2M transactions, with smaller ticket amounts, demonstrates how deeply it has permeated everyday life. Think of digital wallets as mobile purses. In the cash era, you carried bills and coins, whereas in the card era, plastic replaced paper. In the digital age, your phone is your handbag, including dozens of payment methods that operate anywhere. When wallets link globally, it's like carrying a purse that instantly adjusts to any country's currency or network. Another analogy? Moving from fragmented lanes to a digital highway. Traditional payment methods, checks, cards, and wire transfers were slow, isolated, and expensive. Digital payment systems have created large, fast highways where money moves in real time. The next step, global interoperability, promises a transnational superhighway. Emerging trends include system compatibility, increased merchant usage, and the integration of digital payments with traditional retail. QR codes have pushed even street merchants into the digital realm. The end outcome is democratization. Payments are no longer limited to urban, banked consumers. Digital payments have a significant economic and social impact. Financial inclusion is probably the most profound. In India, UPI has enabled millions of individuals and micro-businesses who previously operated completely in cash. By eliminating access barriers, no card terminals, cheap fees, it has brought the informal economy into the digital mainstream. For merchants, digital payments provide faster settlement, lower risk, and more accurate data. They make bookkeeping and inventory management easier, while customers enjoy convenience and benefits. For governments, digital transactions increase transparency, which helps to reduce tax evasion and shadow economies. Cross-border payments are also evolving. Interoperability attempts, such as PayPal UPI integration, might make international money transfers as simple as domestic transactions. This transition might lower remittance costs, increase e-commerce exports, and enable genuinely global small firms, security and trust remain constant concerns. As numbers increase, so do fraud efforts. Privacy flaws, such as Venmo's first public transaction feed, emphasize the conflict between social features and data security. Building durable cybersecurity frameworks is critical for maintaining user confidence. Regulatory complexity is also significant, particularly in cross-border payments, where compliance with anti-money laundering and know-your-customer regulations can stifle innovation. Meanwhile, infrastructural investment in developing markets, such as QR code rollouts and merchant training, is still in its early stages. Finally, consumer behavior carries its own risks. The simplicity of one-tap payments might lead to overspending and debt. The friction that used to cause individuals to think twice before spending has almost completely evaporated. As payments become invisible, financial discipline must become more deliberate. The next step in digital payments is global interoperability. PayPal World, for example, aims to integrate several wallets, PayPal, Venmo, UPI, TenPay, and Mercado Pago, into a single, seamless network. In such a world, an Indian buyer could pay a shopkeeper in the United States directly using a UPI wallet, while an American traveler could use Venmo to scan a QR code in Bangkok. The dream is to have frictionless global trade. New use cases have also emerged. Payments are being integrated into super apps, in-app purchases, subscription models, and even voice or AI-powered interfaces. PayPal has already launched experiments with agentic shopping, in which AI helpers conduct transactions automatically. In emerging markets, the emphasis will shift to microtransactions, offline payments, and rural inclusion. The decreasing average transaction sizes on UPI indicate that digital finance is nearing the bottom of the pyramid. Offline payments, which do not require constant internet access, will broaden reach even further. Finally, technological convergence will blur the distinction between payments, cryptocurrency, and embedded finance. Stablecoins, programmable money, and open banking APIs have the potential to reinvent what payment implies. As fintechs and banks evolve, concerns about regulation, privacy, and control will only grow. If this video got you thinking about how digital payments have changed your life, go ahead and subscribe. We've got plenty more stories about money, innovation, and the tech that connects us all.